G'day everyone, welcome back to Pete's Investing. Today is June 23rd, 2023. This is the nat gas price update. We've got our indicator down here which shows a bullish momentum on the weekly, and that's also bullish on the daily. So that's giving us only long trades to be taken on the hourly when they align as well. So what we're looking at here at the moment, we've got we did hit our target area on the short side. Again, this is for a divergence on the hourly, and I'll explain where we are at the moment as I go through each of these timelines. So on the weekly, first off, as I said, we're in a bullish momentum with this moving average oscillator that was recently introduced, and that just helps support the CCI 150 indicator in terms of addressing trends, but also any divergence that play out. You can see here in terms of divergence, we had a couple of bearish divergence on the CCI longer term versus a bullish on the price chart. That eventually broke down and hit our targets in this area. Then we had another divergence here with a bullish divergence between these highs and a bearish divergence on the CCI, and that has also hit our targets on that weekly time frame. But moving down again, the CCI and the oscillator here generally tracks with the price chart in terms of trend, but we use these two indicators or this oscillator to identify any, as well as a trend, identify any divergence. So at the moment, we're giving a bullish signal to trade only long trades on the lower time frames when they align with the daily, and that's where we've got the daily as well. You can see there a very bullish movement on the oscillator as well as the CCI, still in an upturn, and what we're looking at is a bearish divergence there on the price chart. So we expect that if this CCI and this oscillator continue to the upside, we expect the price to break through this resistance at 27.86. Now we've got that target area in that rectangle there, which happens to be the 23% to the 38% Fibonacci retracement drawn previously. Now on the short side, should this price collapse, that means these divergences will both fail, and then we should see the CCI break below this trend. So in other words, we should see the CCI break that low there to the downside. Likewise, we'll see the oscillator also break to the downside. You'll notice also the oscillator it's just broken through the zero mark, which is a bullish sign as well. So that's a positive in terms of bullishness. Now, again, the upside is there, as I said, but on the downside, if it breaks through this support area at 21.58, we expect this initial target area to be between the 23 and the 38% Fibonacci expansion. That's what that indicates there. So that's a long side and a short side target area if it breaks above the support resistance areas. Now, on the hourly, as I said from our last video, we did hit the short side of this divergence. You can see there a bearish divergence. It broke below this channel. Below that, you would have entered somewhere around in that range, and that would have been your target area. And that target area was drawn using the Fibonacci retracement from that high, I believe, to that low, or that would have been that low there. But it doesn't matter which low you take it at. You take the next closest Fibonacci range, and that was our Fibonacci target. If you watched the previous video, that was addressed by that. Now where we are today, it's actually, as you can see, it's bounced up. So a couple of things to notice here. We've got first off, we measure how that's performing in terms of Fibonacci range in this range here. You can see there it's hit that top. Now it actually came in, it's pretty close to that top there as well. So it came and broke down below the 50%. So in other words, it hasn't broken below the 61%, which is always our key area of a reversal. So that's a positive in terms of upside. And if I draw another Fibonacci range between that range there, I'm just demonstrating how you should basically use Fibonacci if you don't already use it. You can see there it's broken above the 61%. It did that around, on our last video, it was actually hovering around that area after it broke onto the downside. It hovered there, and there was a chance it could have broken to the downside and continued a downtrend. But in this case, it's broken above the 61%, and it looks like it's now hovering in that 61 to the 78% Fibonacci range. Of course, there's never a guarantee it's going to continue up, nor is there a guarantee it's going to continue down. It's all a matter of where the probabilities of this are going longer term, and we only trade in a direction, as I said. When the weekly and the daily indicator down here shows a long position, we take only long trades. And what I've got on the hourly here is a couple of back tests. Is a short positioning back test and a long positioning back test. That should be up there in terms of contracts entered. So you can see that you would have gone long during that period, and you should only be going long in the current period as well. So to understand how to trade this and other trading strategies, subscribe to my Patreon page where we also scan weekly stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.